A three-statement model links the income statement, balance sheet, and cash flow statement into one dynamically connected financial model. Three-statement models are the foundation of which more advanced financial models are built, such as discounted cash flow or DCF models, merger models, leverage buyout, LBO models, and various other types of financial models. There are two common approaches to structuring a three-statement model: single worksheet and multi-worksheet. While both approaches are acceptable, advantages of a single worksheet model includes easy navigation, as you don't have to switch between tabs. However, if the model is complex, sometimes you would want to build it on several worksheets, so it wouldn't take thousands of rows and it would be easier to navigate in that case scenario. You can see an example of a single worksheet three-statement financial model here. There are several steps required to build a three-statement model. Let me walk you through them. First, you would want to input historical information from financial statements of the company and calculate the totals. And to calculate cash flow statement based on historical numbers and some other supporting schedules. After that, you would build some assumptions for historical years and then assumptions for projected years. The next step would be to build supporting schedules to complete income statement, balance sheet, and cash flow statement in the next 3 steps. And after completing all the schedules, you want to make sure that your balance sheet is balancing, meaning that your total assets equals total liabilities plus shareholders' equity. In the next videos, we will walk you through each of the above steps to build a three-statement model.